Hey guys, Matt here. In this week's portfolio update, actually, let's just get right into it. I've been seeing a lot of YouTube videos recently talking about penny stocks, and apparently, penny stocks are the hot new thing on YouTube to talk about and glorify. And I think that's a problem. Now, if you are an experienced investor, you know what you're doing. You have years of experience. You have your risks managed. You know what you're losing. You know what you could lose. Then this video is probably not addressed to you. This video is addressed to newer investors, people whose maybe it's their first year in the market, people who have maybe less than $1,000 equity invested in their portfolio, who might be seeing these videos and copying people and then buying penny stocks because the YouTuber on it says that this is the next big thing. And I want to talk about that a little bit. In order to talk about penny stocks a bit, we are going to pick on GAXY. And the reason we're going to pick on GAXY is because this is a stock I liked. Yes, I know you read the title of the video. So for people coming here with pitchforks and shit, yes, this is a stock I like. GAXY is what's known as a penny stock. Now, according to Investopedia, a penny stock is any stock that trades under $5. Now, GAXY, it trades at 2 cents, between 2 and 3 cents. So it is almost quite literally a penny stock. So GAXY Next Generation is a company that went public a few years ago. I think it has some mergers, and it became the GAXY that everyone knows it, I think, in 2018. And what it does is it develops technologies and whatnot, catering towards education, both in the classroom and even maybe in the workplace. One of their products, I can't remember the name, but their CFO, Megan, she describes it as an iPad that sits on a wall. And that's pretty cool. They also develop technologies in order to help teachers broadcast to students, and also, for students to learn through their teachers and stuff. So this is a technology I think is going to play a really big role, especially in today's society with the whole virus and all that. And this is a company that I look through and I like, and it's a company that I want to succeed. And the first clue that we're going to talk about is this right here, other OTC. What this means is that this company is not trading on NASDAQ or any other regulated exchange. It is traded over the counter. Now, according to Investopedia, some of the risk with penny stocks is lack of information. GAXY actually provides a lot of information, which you're going to see in a second. They have a much lower barrier to entry than the stocks that are regulated on NASDAQ and such. There are also penny stocks that aren't even over the counter. They're on what's called pink sheets, which stocks on those are really bad. They're even worse. Those could be scams because they're not required to fill in any reports with SEC. They're not required to do shit. So those you should definitely stay away from. Now, GAXY does not fall into any of those categories. What GAXY does fall into is it is over the counter, so the requirements to enter that are much lower. And GAXY, despite being around for a few years, is a micro cap stock, and it is very new. It just got a CEO, it just got a CFO. It is very new. We're gonna look through some finances in a second. Now, the point I'm trying to make here is not that GAXY is bad. No, I like it. I like what the company is standing for. It's trying to advance education, and I hope it succeeds. I want it to succeed. What I'm trying to say is that investing in this stock is risky. Now, like I said, GAXY does follow regular SEC reports. This is their 10K, and this is their 10Q. This is from their 10K. Take a look at their assets from 2019 to 2020. Now, the number is going up, which is, this is a growing company, and you're about to see in a second that it is growing in revenue. However, their assets, while increasing dramatically, right now they're holding $4.4 million in assets versus $12.2 million in liabilities. That is over twice the amount of liabilities. And assets are the things that make the company money, and liabilities are the things that take money away from the company. So right now, the company is losing money. If you want to take a look at it quarterly, it is going up, which is a good sign, from June the 30th to September the 30th. However, they still have over twice as many liabilities as they have assets. Looking at their revenue from 2019 to 2020, I mean, we're talking $1 million difference. So that's pretty good. The company is growing. Like I keep saying, there's a reason why people are buying into this. And they also have a nice gross profit that is blossoming nicely. However, they are bleeding money. Like, they are bleeding money. They're bleeding more money. Especially based on stock-based compensation. Like you'll find if you do your own research in this company, they're losing a lot of money towards issuing stock. And according to their cash flow, I mean, they're generating capital through selling their own stock. Which, they're a new company. I can see that's what they're doing. As long as that ends up stopping over the years, that's fine. But as of right now, they're bleeding money. Looking at their quarterly, I mean, same thing. I mean, they're jumping up in revenue. They're jumping up in gross profit, which is nice. But I mean, they're still bleeding in operations, especially that stock-based compensation. So keeping the lights on, all that stuff. I mean, they're bleeding money through that. Cash flow, again, bleeding money. This is just their 10Q. I'm just gonna stick with that for the cash flow. Cash flow, bleeding money. Their operating activities, they're losing money. They are getting cash from financing, which is actually not a good thing. That means the cash flow that's coming in is coming in through selling stock. Now, none of this is the end of the world. Like I said, the company is just starting out. But what I'm saying is that this is very risky. The company, even though it's been around for a few years, is at the very start of things. They're just now starting to get things together. And although I want to see the company succeed, I mean, that's years down the road. Seasoned investors that are investing right now, at least I hope so, they're not investing in GAXY for this right now. They are investing for what they think GAXY is going to do over the next, maybe 3 to 5 years, maybe longer than that, which is fine. They have different financial goals. They can manage their risk. They're probably putting in money that they can afford to lose. At least I hope some of those are correct. But newer investors, no, you have no reason to cut your teeth with penny stocks. Your first investments need to be very proven companies that have been around for a while, that are gaining profits, that have a clear that have a clearly defined track of success behind and ahead of them. Those need to be the stocks that you're starting out with, at least for the first year or so. And then maybe, after you got some discipline in, after you've learned to see your stocks go up and down, maybe after that, maybe you can, try a penny stock or whatever. And even then, I don't know if I'd recommend it. I mean, I would still recommend you stay away from penny stocks and gravitate towards strictly valuable companies. And that's the thing is, I mean, the fact that the stock is only 2 cents, almost 3 cents, I mean, that seems like, oh, that's a cheap stock. But you have to buy a lot of shares to put in an investment that's sizable. And because you're buying a lot of shares, you're going to see that the equity of that investment go up or down dramatically as the price shifts. And with GAXY, I mean, these next few years are going to be very crucial for it. While it's jumping in revenue, it still has to do something about their bottom line. Now, one good thing about it is that, according to their latest shareholder report, that they got rid of all their debt. So this company has a good head on it, and it's on the right path. I watched their latest interview with their new CFO, Megan McGee. I like her. I like her a lot. She has a good head on her shoulders, and she is very vocal on Twitter. As far as I know, she seems to be very transparent about the goings on in the company. Like I said, a company I want to succeed, but this is something that you should probably reconsider if you are very new to investing. So what I'm trying to say is that GAXY is not a horrible company by any means, and again, GAXY is a penny stock that I like. And there are penny stocks that are probably there are penny stocks that are kind of shit. And what I'm saying is that although it means well and is doing the right things now, because it is so new, I mean, one bad year could end the company. So if you're new to investing and you're watching these YouTube videos, talk about penny stocks and whatnot, all I'm saying is be careful. I'd recommend not going in at all and sticking to well-known companies, but if you're not going to listen to me and you're going to do it anyway, just be careful. And like we do every week, let's end it by going over the portfolio. And me and my tons of stocks. Cisco just got dividends today, and just today I got $32.41 from Cisco, which went right back into the stock. And so because of that, it's sort of skewing up the today's gain and loss and stuff. So you're not going to be able to get an accurate representation of my total gain and loss. However, the current value remains the same. I am sitting at $38,151.89. I don't quite remember if that's up or down from last week, but let's be honest, I'm doing pretty well. And minus Cisco, I got a 44.86% gain. And we are just below five-figure gains. And I already know that once Cisco comes back in, I'm going to get five-figure gains. Things are going very well. ARC is blossoming nicely. Cloudera is holding its own. Intel is really starting to inch back up there. We're up to 24.03%. I'm recording this on Wednesday. They have earnings tomorrow, so we're going to see if they fuck things up or not. FedEx, my latest investment, it's doing the thing where it's staying completely flat. Like, the idea is to buy more if it drops down or to hold off if it rises up. And right now, it's doing really neither one, which is kind of annoying. I mean, I haven't really bought anything. I'm just nibbling on a few shares here and there of dividend stocks. I bought a few shares of Realty last week, but that's it. But anyways, I want to know your opinion. Do you hold GAXY stocks? Do you hold any penny stocks? Are there penny stocks you like? Let me know in the comments. But other than that, take care, have a great day, and eat your vegetables.